High on franchising. We're going to talk about private equity today. I have Patrick Galleher, the managing partner and CEO of Boxwood Partners.
Up next.
So you gave one big secret. I was going to ask you the next question. So what are the best sectors or verticals to invest in?
If you can get into the right franchise system with the right leadership team, it can be a great first step into business ownership and entrepreneurship.
Yeah, boy, you just hit on another big controversial topic. Can you be a semi-absentee or essentially part-time owner? Patrick, welcome to the show.
Thanks, Lance. Happy to be here.
Well, Patrick, we're going to dive right in with what I call kind of the obvious. What is private equity's obsession with the franchise space?
Well, Lance, I mean, that's a pretty easy question to answer. Franchisors tend to have really good cash flow, low SG&A, high EBITDA margins, and a lot of predictability in their royalty streams and their profitability. So very easy businesses for private equity to use leverage and get good leverage multiples from private credit funds. And over the last 15, 20 years, franchising's been a big hit within private equity, and you're seeing more and more private equity groups get interested in investing in franchisors and franchisee groups every month. It's been one area of one vertical within private equity that's performed very well through the recession of 08, 09, and then also through COVID. Excluding restaurants, residential services franchisors did extremely well during COVID as consumers renovated their homes and added fencing and added new roofs and made their homes more livable as they didn't go to the office as much. So franchising over the last 15, 20 years has proven time and time again to be a great place for private equity to invest.
So you gave one big secret. I was going to ask you the next question. So what are the best sectors or verticals to invest in? And you said home services. So that's obviously a great one. And I think one that you've already invested in multiple times, right?
Well, we've represented many home service brands and bringing in private equity. So we were very busy over the last 5 years representing home services brands like Outdoor Living Brands, Junk King, Junk Luggers. We've done a lot of investment banking work within the residential services franchisor space. Those deals have all turned out very well for the private equity firms that have invested, and we don't see that trend stopping anytime soon.
So as a private equity expert, what would your advice be to a franchisor looking to exit within 3 years? What do they have to what do they have to make sure they have buttoned up in order to get the best valuation?
Well, that's another softball question, Lance. All comes down to unit level economics. It's if the franchisees are profitable and growing and adding locations and fulfilling their development agreements and maintaining good margins and good validation with new franchisees, those are kind of the key drivers of increasing enterprise value for a young emerging franchisor. If the franchisees aren't happy, they aren't profitable, and they're not making money, then your franchisor is not going to grow in value. So as an emerging franchisor, that's the number one piece of advice: is really focus not just on selling new franchisees, but making sure your existing franchisees are happy, profitable, and looking to add more locations or territories.
Yeah. I remember years ago, I used to always hear that a franchisor could exit for 10 times EBITDA or 10 times cash flow. And I would hear that often. And then all of a sudden, I hear of a guy that exits for 30 times EBITDA or cash flow. I mean, depending on how the valuation is working. Pretty incredible numbers.
The multiples over the last 5 years have been very good for franchisors, and I always couch those multiples based on what EBITDA someone's paying or investing in the franchisor off of. If the franchisor has a lot of sold but not yet open locations, the multiple would be higher if they have a track record of opening new locations on that development schedule. So
Yep.
it's possible to get a 30 times an historical EBITDA multiple if you have, say, 100, 200 locations that are sold but not yet open, but you have a track record of ramping those to maturity within 24 months or 36 months. So the multiple really depends on a lot of different variables within the franchisor, and that's what private equity is looking for. A franchisor that has a track record of getting their franchisees up and running. Typically, when you look at profitability at the franchisee level, especially with a service-based franchisor, you want something like a 24 to 36 months payback of the initial outlay for the franchisee, and then they're profitable after that. So there's a lot of key metrics that we look at when we're evaluating a new franchisor to take on as a client that we know the private equity firms and the market's going to look at when they start evaluating how to value that franchisor.
Describe a little bit further the services that Boxwood Partners offers to franchisors and even larger franchisees.
Yep. So Boxwood is a sell-side advisor. So we help franchisors, consumer products companies, multi-unit retail companies create liquidity and exit planning. So most of our deals, the owner, founder, family that owns the franchisor stays on board, usually rolls forward about 20-30% into the new deal, into the new co. But we help take the franchisor to the next level. Most of our deals involve private equity. We also represent private equity firms when they go to sell their portfolio company to their next to the next private equity firm. I think Neighborly has now sold 5 different times to 4 different private equity firms. Riverside actually bought it twice, and now it's owned by KKR after Harvest Partners sold to KKR. So there's a lot of track record, especially within residential services, of multiple private equity firms buying franchisors and then trading them up to the next private equity group. So
Yep.
we help the private equity firm or the founder or family, kind of run a process to find the right next private equity firm for that brand.
Patrick, all over the internet at any time, you'll see various gurus promoting that you should buy an existing business. Just entrepreneurship through acquisition, buy an existing business. But what I've found over the years is I know people looking for years, especially when it comes to a first business, because a franchise I've always found is the best option. What do you say on this subject?
If you can get into the right franchise system with the right leadership team, it can be a great first step into business ownership and entrepreneurship. So finding a franchisor that has a good training program that really helps their franchisees launch and ramp up is critical. And there's a lot of franchisors that are really good and some that are mediocre. And the ones that survive and thrive over time are the franchisors that really make sure their franchisees become profitable quickly. And those are the ones that we try to work with, and those are the ones that have been proven over time to survive the recession in 2008 and did very well during COVID.
Yeah. So besides working with someone like me to help make sure that the listeners are getting into the appropriate franchise business, what is your advice? What are the top things you're looking for if you're getting your son or daughter a franchise tomorrow?
I think it's good validation calls with existing franchisees. Make sure you do your homework. Make sure you get out there and talk to franchisees who are on the front line trying to make money within that franchise system. That is critical. Look at the FDD on how many have closed over time, where they've closed. Try to ask the franchisor for more information. Make sure you look at the item 19 and how the performance is of the franchisor, franchisees within the franchisor. Really, and decide what you want. I mean, some franchise systems are better for owner operators, and some are good for kind of owner managers who are more hands off. So make sure you don't go into a franchise that really is an owner-operator franchise system versus, kind of an invest in a franchise like a car wash system or something that you don't have to be there every day. So you got to look at yourself and what you're good at and what you really want out of the business, and that determines kind of culls down the list of franchise systems to look at.
Yeah, boy, you just hit on another big controversial topic. Can you be a semi-absentee or essentially part-time owner of a franchise, or do you have to be a full-time owner-operator? And you just said there are options that you believe you can be a semi-absentee owner. So what are those skills? Because I know you mentioned fence and rail brands earlier, and I love those businesses, unique niches, and all of them, for the most part, you can be really a part-time owner if you hire the right GM, but some people don't have that leadership experience. But what do you think on that specifically? What does it really take for somebody to be successful in some of those types of businesses?
Yeah, I think in the fencing type business or mosquito spray or some of those kind of lower cost entry residential service brands, you really should be prepared to operate it yourself for a period of time and learn the business in and out before you start hiring a general manager and expanding locations. The best way to build that business is by doing it yourself and being part of it first, where, if you have $2-3 million to invest, you might be able to build a car wash and, do a franchise like that where you don't have to be on site every day and you're more, kind of managing the franchise versus operating the franchise. So really making sure you talk to a good franchise broker and you get some good advice on, to try to match up the franchise brand to what you're looking to achieve and what you want your lifestyle to be versus, some of the others. So, you don't want to, if you don't want to work every day, you don't want to go into a specific franchise. You don't want to become a franchisee of a brand that you need to work every day.
So what are you looking forward to the rest of 2025 here? We're in a little bit of a turbulent time here with tariffs. So what does that mean for you in Boxwood?
We're pretty busy right now. We've got a great list of mandates right now. We're working with quite a few great franchisor brands on their next capital and where they're going from here. And hopefully we get some stability in the government and the news every day. That every day people don't wake up scared about the future. So it's stability would be good, but franchising is great from the standpoint that tariffs don't impact the vast majority of franchisor brands. So it's a good place for us to be doing investment banking work at the moment. Continues to be. Now we're recession-proof, COVID-proof, and now tariff-proof on the franchisor side. So, we're knocking off a lot of, things that scare private equity, and that's great. I mean, it's private equity. What a lot of people don't realize is private equity has a timeline on the money that they have to invest. So, private equity funds that raised funds in 2018 and 19 are coming up on their call period. So they have to put money somewhere. And so they're trying to find places that are more secure. Typical private equity firms have a 7-year call period on the money they raise. So if they don't invest it within 7 years, the LP has no commitment to that private equity fund for the callable capital. So, funds that were raised in 18, 19, a lot of private equity funds sat out during COVID. And so they've kind of cut in half the amount of time they have to put money to work. And that's where, we've really gone out and pounded the table that franchising is a great place to invest in today's, kind of tumultuous market out there. So it's we're seeing more and more private equity firms that weren't interested in in franchising get in the last 12 months, 24 months. I mean, we're seeing firms that had no interest in private equity 5-6 years ago get very aggressive on the franchise front.
So we talked about home services earlier, talk about another sector or two that are favorites of yours. Home services is certainly one sector of mine that I love. senior home care, business services. What else looks good to you these days?
Senior home care is great. We just worked on a fairly large senior home care franchisor and got that across the finish line. We've done youth enrichment. We've did Sylvan Learning Centers last year, and we've got a couple youth enrichment franchisor brands we're working with right now. And we think fitness, wellness is going to be really instrumental in 25 and 26. We've done a bunch of beauty franchisors like Lash Lounge. We did Forever Young. We worked with VO Med Spa. There's a lot of opportunity in the health and wellness space as America tries to get healthier. I think some of the Planet Fitness and some of the extreme or more high intensity fitness brands might be slowing down a little bit with GLP-1s, but there's still a lot of opportunity in the Pilates space. And we did Stretch Zone with Princeton Equity, and the stretching market just came out of nowhere 4 or 5 years ago with Stretch Lab and Stretch Zone. And having gone through having aging parents, stretching is just a key component of keeping your body healthy as you get into your 60s, 70s, and 80s. So I think you're going to see a lot of opportunity within some wellness brands that you might not have heard of 2-3 years ago.
Yeah, no, that's great. So share with us and the audience one bit of wisdom that I guess you could say is the cornerstone of Patrick's success. Looking at businesses, advising businesses. So give me some good entrepreneurial advice for the audience. Well,
one is if it sounds too good to be true, it usually is. So I take a skeptical view of everything. So if someone's calling you and say this is going to be an immediate 2-3 times return, that's a red flag in my book. So making money takes a lot of hard work, a lot of dedication, and you need to appreciate the fact that easy money is not out there a lot. So I think if it sounds too good to be true, especially in the franchising space, make sure you do your homework and you call franchisees and you talk to good franchise brokers, and you really it's just like Lance. And as I said, just stay skeptical, but stay positive. And there's a lot of growth out there, a lot of franchisor brands that can really help you in your first entrepreneurial endeavor. And make sure you do your homework and pick the right partner to build your franchise.
Yeah. So trust the process, but verify.
Yeah, we have that billboard up in our office in Richmond, Virginia. Trust the process. It's we tell that to our clients all the time. When we run a process for them to help them find the right capital to help them grow their brand from 100, 200 locations to 1,000 locations, we always tell our clients, trust the process. It works. You're going to find the right partner. You're going to find the right deal. It usually takes about 7 to 8 months, the process we run. But it works. And I say the same thing to potential franchisees when, friends call me and say, should I do this brand or should I do this brand? I go, it all depends what you want. You got to define first what you're looking to achieve, how much capital you want to deploy, and then how hard you're willing to work. Some franchise brands take a lot of hard work to make money at them. You just gotta commit to that if you're gonna spend the time and money to buy a franchise.
So Patrick, what advice would you give to younger emerging franchisors?
Well, Lance, that's another great question. I speak to a lot of emerging franchisor conferences, and the one thing I try to convey is franchise development is critical. But if you do a lot of franchise development before you focus on franchisee profitability and helping your existing system become profitable, then that's only going to come back and hurt your growth and your enterprise value later on. So really trying to balance the two and making sure you have the staff and the resources to properly train and ramp up your existing franchisees is more critical early on than franchise development. So I think balancing the two and making sure you're picking and choosing the right franchisees who can take that training and ramp quicker becomes a better, solid foundation for longer term enterprise value growth for the franchisor.
Awesome. Patrick, you've been fabulous. Thank you for sharing all your information. This has been great, and I look forward to seeing you soon.
Great. Well, I appreciate it, Lance, and look forward to seeing you. Hopefully you get out to Vegas soon and have a drink. So,
you got it.
Great. Thanks, Lance.
Cheers.
If you're ready to talk about franchise opportunities, hit the link below to schedule a call. My services are free, and don't forget to like, comment, and subscribe. Thanks for listening.